Millions of people will finally hit the ultimate middle-class milestone this year. They will open their banking apps and see exactly $50,000 sitting perfectly still in a savings account. Even though holding that exact amount of cash is mathematically guaranteed to make them poorer every single day. So why do we treat the most dangerous financial trap in the modern economy like it is the ultimate victory? Picture a normal Friday afternoon. You check your phone, the direct deposit clears, you see the balance, $50,000, $50,000. You feel a profound, overwhelming sense of relief. You skipped the expensive vacations, you packed your lunches, you drove an older car, you sacrificed your short-term comfort for years to build this number. You look at that glowing screen and feel like you have finally built an impenetrable moat around your family. You feel completely safe. But a brilliant, entirely invisible trap has just been executed right in front of you. You think you locked your wealth inside a massive, secure steel vault, but actually, you locked it inside a burning building. Every night while you sleep, an invisible fire is quietly incinerating your purchasing power. The numbers on your screen never physically drop, which is why your brain never triggers a panic response. But the reality of what that paper commands in the physical world is being violently erased. We are taught from childhood that cash is a permanent storage facility for our life's energy. We believe that a dollar saved today is a dollar preserved for tomorrow. But the real reason this habit destroys wealth goes far beyond simple inflation. Fast forward 5 years, you finally decide to use that $50,000 to put a down payment on your dream house. You walk into a real estate office, incredibly proud of your discipline. But the housing market has completely skyrocketed. The price of the home has doubled. That $50,000 you sacrificed half a decade of your life to meticulously save, it barely even covers the closing costs anymore. Your commitment to playing it safe is exactly what priced you out of the market. Most people disagree why this happens. If you ask traditional financial advisors, they will fiercely defend the idea of holding massive cash reserves. They tell you that a huge emergency fund is the only responsible way to protect your family from disaster. Some economists argue the exact opposite. They claim that in a modern fiat system, safe money is a complete illusion, and that hoarding excess cash is a form of slow-motion financial suicide. Here is where people are split. Is cash the ultimate king, or is it a guaranteed liability? People don't make bad money decisions. They respond to the environment around them. And your environment aggressively trains you to confuse a temporary vehicle with a permanent destination. Society terrorizes you with breaking news of market crashes and bursting bubbles, triggering a biological panic. You hoard cash because you're terrified of looking stupid if the market drops. But the real reason you're losing this game is much stranger. Look at your $50,000 from a completely different economic position. How does your bank actually view your massive savings account? To you, it's your life's energy stored safely for a rainy day. To the massive financial institution, it is incredibly cheap leverage. The moment your deposit hits, the bank does not protect it in the dark. They immediately get rid of it. They take your $50,000 and use it to buy commercial real estate, corporate equities, and cash-flowing businesses. They lock it into high-yield, long-term assets. They are using your own savings to buy the exact assets that are currently pricing you out of the market. You are actively funding your own financial displacement. The biggest financial advantage isn't intelligence, it's which game you're playing. The diligent saver is playing a game of nominal accumulation. They want the number on the screen to go up. They prioritize the avoidance of short-term volatility over the pursuit of long-term freedom. They want to sleep soundly tonight, even if it means they will inevitably wake up poorer a decade from now. But the truly wealthy play a completely different game. They know that cash is meant to be a temporary vehicle for transactions, never a permanent storage facility. They know that hoarding massive fiat reserves means unknowingly paying a silent compounding tax. So the ultra-wealthy only hold enough liquid cash to cover immediate, operational emergencies. Every single other dollar is ruthlessly deployed into hard assets that move faster than the central bank's printing press. They trade a localized, depreciating hallucination for an absolute ownership stake in the physical world. Wealth is often less about effort and more about position. If you position your wealth entirely in paper currency, your effort will constantly be drained. You'll paddle against a furious, invisible current for your entire life, wondering why the cost of housing, healthcare, and groceries always seems to outpace your massive savings. You'll feel safe, but mathematically, you'll be bleeding every single day. But if you position your wealth in productive assets, the exact same macroeconomic system pushes you effortlessly forward. Let's slowly reveal the invisible forces holding this entire machine together. The incentives of the global banking system desperately need your fear. Banks need you to be terrified of investing, so you leave your money sitting safely in their accounts. Your extreme caution provides them with the exact raw material they need to generate billions in profit. The structures of modern central banking are meticulously designed to target a continuous inflation rate every single year. The system is openly, legally telling you that your cash will lose its value by design. The social pressures of your peers congratulate you for having a massive savings account, blinding you to the invisible math operating in the background. Long-term, the probabilities dictate a ruthless, undeniable truth. The stock market and real estate sectors will fluctuate wildly in the short term, but cash will lose its purchasing power with 100% mathematical certainty in the long term. The people who save $50,000 and still feel entirely stuck did not fail the system. They followed the system perfectly. They did exactly what the economy required them to do to function smoothly. They absorbed the inflation, they provided the cheap liquidity for the financial sector, and they prioritized their emotional comfort over their mathematical reality. When you finally understand the mechanics of this illusion, your entire relationship with money shifts completely. You stop looking at a massive savings account as a trophy. You realize that a giant pile of cash is just unassigned potential. It's an army sleeping in the barracks while there's a war to be won. You recognize that there is no such thing as zero risk. You can take the volatile, terrifying risk of owning a piece of the global economy, which historically leads to immense generational wealth. Or you can take the comfortable, silent risk of holding cash, which mathematically guarantees your decline. Money is simply a tool. It's meant to be put to work. If you leave it sitting perfectly still in the dark, it doesn't stay safe. It simply goes to work for someone else.